basically for every transaction that I could. This year I've had actually quite a few cash sales, so don't need financing. But she actually handled the loan on my own home that I just recently purchased. And I didn't really even think about it, actually. She went and got certified with the lender that was handling the loan, and then handled the loan from there, and I just really never, I just went on about my prospecting day looking for people to buy and sell real estate.
Went to Europe.
Went to Europe, went to Italy, and I know it was probably a little less responsible approach than maybe some of our other clients, but I really had full confidence in her. And so I recommend her highly. I'm going to continue to use her as often as possible. So with that, we have a members moment focusing on Jennifer Marshall from First Capital Group.
So I'm not quite sure where to start, I guess.
Well, I guess basically tell us how business is, and and then just kind of go into how we could help you create more business. I mean, look at one of the things that we're trying to do is step up our approach to power teams a little more, and perhaps you could suggest other people that we could invite as visitors here to increase your reach through BNI.
Sure. So my business right now is good. I can't really complain, but I am noticing, because I did work for the bank before and I didn't work directly with clients, I'm not nearly as busy as most of the people in my office, because they've just got a huge client base, and they said, oh, hey, I'm doing your loan again. I've got it all in the system. And the clients are just like, okay. I get a lot of my leads from the Chronicle, from Diamond Certified, and those leads are a lot more difficult because those people are shopping a lot. I don't have a rapport with them. They're not a referral. A referral lead is such a better lead because they have a lot more built-in confidence. So that's, I was talking to Stephanie about it, that's my big problem. My last job, I had no problem walking into an office and asking for the business. Now I talk to people in a room, and I might talk about their home or whatever, but I don't say, hey, can I do your loan? That's my big problem, like when I'm talking to neighbors. So, that's what I need. I need more quality referrals where the people aren't necessarily going to shop me, and I think I need to work on myself as far as asking for the business. And, not just going, oh, that's great. You're working with Bank of America. Okay. So.
Well, just one thing, at least I know, so before I've given you I'll get the feedback that I've gotten from the client that you're great. You follow up, and you're great with what happens. And I think that's really important. You're going to encourage me to do more. And also to tell clients who have stuff like that ready to get you, talk to you as a second opinion. Because sometimes when you get that good feedback, they remember you, and they're going to be further friends to you. And hopefully, I'm hoping over a year or two that's going to start happening. Yeah,
and my business is definitely growing, and I think I do, after 20 years, I think I do know what I'm talking about. A lot of the problem that I have is I tell people the truth, and they don't want to hear the truth. It's like, well, you can't do cash out at that rate. I don't care what that other loan officer is telling you. These are the rules. And I tell them what the real rates are. And a lot of these shops you call in, and pricing is based on like 15-day pricing, 30-day pricing, 45-day. It takes like 60 days to do a loan, so I quote my clients what the real rate's going to be, and they don't want to hear it. They call somebody else who's just some Joe Schmo, and they quote them the wrong rate, and that's because I don't have these qualified referral leads. That's a lot of my problem.
So what's right now, of course, rates are historically low, but also everyone says it's really difficult. So you say it's very difficult to get loans relative compared to what it used to be, of course. What are the main barriers to getting a loan? Because if I'm speaking with someone who is a potential for you, it would help me to know what are the things to be thinking about that may be little flags that they need to be aware of in terms of getting a loan or not getting a loan.
The big barriers right now are declining income. So most self-employed borrowers had declining income in 2009. That's an automatic turn down if it's over a certain percentage. So even if you made enough money in 2009 to qualify for the loan, because you made less than 2008 and they won't look at your year to date, it's a turn down. You can finagle those numbers, but that's a big problem. So declining income in 2009 is a problem. A lot of those people are going to have to wait till they get their 2010. Credit scores are a huge issue, especially with the larger loan amounts. Any sort of credit lates, a lot of what I do is counsel people on how to get lates removed. You know, I had a guy that had a $50 collection from GameFly. It's just some like online gaming thing, and it brought down his score by 81 points. I mean, it's crazy. So he doesn't qualify for a loan. That's nuts, you know. So trying to give him advice, it's probably going to take him a couple months to fix it, but he probably will. Properties are a big problem. So basically, anybody under 400,000 loan amount or below will probably qualify for the Obama plan, which means you can go up to 125% of the value of the house. So people in, you know, people in Sacramento, Vacaville, the Central Valley, that are like, I can't do anything, I'm underwater. Well, that's what those loans are for people that are underwater, that don't want to do a short sale or don't want to walk away from their house. There are financing options. Those plans are not usually available for the people with the larger loan amounts because their loans are not owned by Fannie Mae or Freddie Mac. So they have to be Fannie Mae or Freddie Mac owned.
What's the limit on that?
Right now it's 729, but when those loans were originated, it was 417. So you got to look at when those loans were originated.
So it's not 725?
It is, but if you're underwater, it might not be 729. There's a if you just Google Fannie Mae lookup, you can put in your address and it'll tell you whether Fannie Mae owns your loan or not. That's a good thing to do. In the city, the big problem is, again, anybody that bought in 2006, 2007, you know, right at the height. San Francisco only dropped 10% compared to the rest of the country that dropped 30%, but those people can't refi. It's really difficult. You know, they put 20% down, but the value dropped 10%. So it's a really difficult thing. Companies like Union Bank, I'll refer a lot of people back to Bank of America. They have their rate reduction loans. So basically, if you go back to that same lender, they can help you. So a lot of what I do is just advise people and where to go, even if I can't do the loan, so that they can take advantage of the bigger rates or the lower rates. Yeah.
Who are some strategic power partners that you'd like to see in this chapter that would really help your business?
Good question.
Commercial broker.
Mm-hmm.
Either commercial finance. I have the ability to do it, but I just basically broker it to somebody else.
Mm-hmm.
Commercial realtor, which is going to be probably more difficult to get in somebody in this market. Commercial real estate's kind of a crazy right now. You know, the financial advisors. IT people are always good. I think we really need IT people because they touch everybody.
I have a question, Jen.
Yeah.
Do you want to, first of all, and how would you position yourself not as somebody that is a specialist in a difficult loan, but in the easy loans, just to make your life simpler? So in that case, you're not dealing with difficult criteria,
Right.
but giving them the best rate.
Right. So my
come
job.
to me, I know the.
My job as a broker is to shop the very best rate. So I subscribe to a service. I subscribe to several services that update me on rates like 3 times, 4 times a day. It gives me market updates. Then I have a service that sifts and looks through all the different lenders, and I can say, okay, today Citibank will give you $10,000 in closing costs, where Wells Fargo will only give you $3,000. Let's go to Citibank. You know, and that's what the power of using a broker is, where you go to your bank, and Bank of America might have the best rates. Nobody can broker to Bank of America anymore, but a lot of times they don't. They don't have the best rates. So it's good to shop, and usually that's the service I provide. And I also look at the lenders and go, okay, I know you're going to have an appraisal issue. I'm going to go to this.
You know the underwriting guidelines.
Yeah,
That's
I'm going to go to this
combination.
lender that only uses local underwriters because I know your property's going to have an appraisal issue. And that's a lot of what it is, and a lot of it is just putting it in the right place to begin with. You're in a trust. We're going to Wells Fargo. They'll vest you in a trust because it's very expensive to put your property into a trust. And, you know, to pull it out and put it back in, a lot of people don't like to do that.
Just one last thing, the point about the things that are obstacles for people, like the 2-year rule for self-employed people other than declining income, that you can't get refi or.
This is the story of my life.
4 years, file, return as a self-employed, but no. So
And
the
the-
W-2 1 year, unemployed the next year, you can't get along until you have 1 year.
I actually do not qualify to refinance right
Yeah,
now.
I don't either.
Because I don't have 2
full
full year tax returns with Schedule C.
And how about tenant occupied units instead of it being your own residence?
Tenant occupied rates are great right now.
25?
Yeah, you just have to have equity, and that's the problem.
No equity.
Yeah.
Don't have equity, sorry.
Oh, that.
The government plans do not, they have to be owner occupied, so the properties that are upside down that are tenant occupied are pretty difficult to do.
One final question here from Camilla.
Oh, well, I was just going to say, you were talking about having difficulty in talking to your neighbors and the work on yourself, and
Yeah.
I think it's always important to maybe not, in your mind you're thinking sell, this is a sell, but to them it's a service and you're helping them, and I think even in your mind spinning it to yourself that
Yeah.
I'm offering this help, it's a service that I provide to people more than I'm trying to get your business.
It's melding my social life with my business life, which I'm not good at, because
Yeah.
before, because I worked for the bank, I never dealt with the public, I could always keep that very separate.
Yeah.
I could advise you, but I wasn't trying to sell you.
Yeah.
And that's a hard
It
transition
can,
for
yeah,
me.
It can get icky for sure.
Yeah, yeah, a little icky, yeah, it's like, ooh.
But you just go, yeah, spin it as like, I'm healthy. It's an out.
I know, yeah, so, thank you.
All right, thank you, Jennifer.